The stock market and crypto crash. What to do when the market crashes. What to do when the market crashes. The key thing to note is that whether there is a true market crash or there is a recession or just a mere healthy corrections or dips, it is always a buying opportunity. That is the first thing to note. Now, the question is, why do I say that? This is because in the long term, it doesn't matter what happens in the long term. So now, if you look on the screen, you can see the 5-year projection of S&P 500 and that of the Nasdaq 100. The same thing applies to BTC, which is Bitcoin, and that of Ethereum over the past 5 years. The past 5 years, we saw the effect of the COVID-19, that's the 2020 pandemic effect. We saw the market crash in 2022. Yet, over the 5 years or the 5-year period, we've seen that those 4 investment categories we are talking about, being Ethereum, Bitcoin, S&P 500, and Nasdaq 100, they've all gone up significantly. So what it means is that in the long term, whatever happens to the market, it doesn't really matter. This is because it turns out to be an opportunity. Now let's come to what happened to this recent market reaction. Even though on the 2nd of October 2025, GKA Ministry of Money Masterclass rightly predicted that such a crash or such heavy correction was inevitable. We said that for 2 reasons. This is because, in general, the US economy and the global economy are not doing well. This is because there are a lot of factors affecting that. The key thing to remember is the geopolitical effects, the wars, the Russia-Ukraine war, the Middle East crisis that's between Israel and Hamas, the possible war breaking out between Iran and Israel, and so on and so forth. We have possible US and Venezuela full-out war. The same thing applies to India, Pakistan, China, Taiwan. So all these fears of war and existing wars are affecting the global economy. Due to this, it doesn't make the world's economy healthy at all. So the world's economy has been due for significant recession or something like a Great Depression for a very long time. But that hasn't happened due to significant contribution or effects of AI and blockchain. So what AI and blockchain are doing now are significantly helping to change all things. Now, you saw that the recent market decline on the 10th of October was as a result of a tweet, of which most of you might have seen the tweet by the US president on tariff, and the market reacted to that. Now, the key thing I want you to understand is that when it happens like this, for us to say that the market is safe or not safe, it depends on many factors. One key thing is that, is there any significant structural change? Is there any significant fundamental changes that can lead to a complete market, elimination or market crash or complete maybe market decline that is not going to recover anytime soon? It will depend on a number of factors. Now, the key thing is that before I talk to you about what Tom Lee, that's one person that we listen to, we consider his analysis much among other analysts, is that he has said something about, or he has shared his opinion about this recent decline which began on the 10th of October. Now, before we listen to him, there's something that I want to say. I've also mentioned in a previous video about the position of Warren Buffett. As it stands now, Berkshire Hathaway is sitting on heavy cash. And when he was interviewed, he says that he sees the current market being overpriced. So he sees higher over valuation. And therefore, until he sees prices coming to what looks sensible to him, they will rather sit on cash. And if anything at all, they will be investing in investment categories that are hedged against the stock market. Now, that is his view. And I think um, um, Warren Buffett is 100% right. As it stands now, when the US stock market, especially the S&P 500, is sitting on a high valuation of something a little above 40p, then it means that the market is overvaluated or is living in overvaluation. And when this is happening, many strategic or many institutional investors, smart monies, are not going in the market. The reason for which the VIX, which is the fear and index or volatility index, remain neutral for a longer period of time is that smart monies were not going in. They were sitting on cash. The reason for which silver, gold, and other commodity assets were going up high because they serve as a hedge against the stock market. So people were buying gold, buying silver, and they were hitting all-time highs, and they outperformed the stock market, or let's say the S&P 500 and the Nasdaq 100. This is because smart monies wanted to see that the market makes a correction. Now, when you ask me if the market had not made any correction at all, my fear was going to be so high, such that when you enter into November, December, probability that the market will continue to go high is so high. The reason for it, I predicted that October 2025 to latest by April 2026 is because if the market does not correct in October, and then we enter into November, December, January, probability that the market will continue to go high, it will just come down less than 1%. I mean, the S&P 500, and it keeps going high, keeps going high. That puts everything at a higher risk. From that top, I don't think any healthy correction or any correction will be enough to save the market. The market will from there most likely go into recession or Great Depression. But when the market makes healthy correction like this, then it can continue. And when the market continue, then we are looking at what happened in 2026. Now, the market is rallying on one factor. And before we look at that one factor, I want us to listen to what Tom Lee said. Once we listen to what Tom Lee said, I can comment on that and we wrap up this video. So now let's listen to what Tom Lee said concerning the recent market.
All right, so let's bring in another big macro market voice. You know him, Tom Lee, co-founder, head of research at Fundstrat. Tom, it's only one day. We get it. We're still, the bull market we heard earlier, still intact. But your take on today's move and what may lie ahead.
Well, Brian, it may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is concerned, but as your other guests have said, especially Rick, I mean, unless there is a real structural change, this pullback is a buying opportunity.
Wow, 51st biggest move for the VIX. So why is it good that the VIX is responding? What does that signal?
It shows you that investors are seeking protection. And as you know, the VIX is a measure of expected volatility of the largest 100 stocks. And so a spike in the VIX is really a market saying, okay, I need to get out of everything, but I can't sell everything. So let me hedge it by buying volatility. And that is usually a sign of an interim low. I mean, I don't want to say I think markets are bottoming today, but we know that the forward returns are pretty good 1 month and even 1 week later. So I would say if someone says, are we higher a week from today? I'm going to say the odds are actually really good. Or, we might even be 60 points higher.
Well, wow. But that's happened. That's what's been happening, as we talked about earlier in the show, Tom, that we've seen these buy the dip buyers come into the market. We get a day like today, the dip buyers come in, we're higher a week later. Do you expect that to happen again, absent some further escalation with China?
Yeah, I mean, anything's possible, Ryan. And I think that we the markets lived through this February to April, and it was a day by day panic, and maybe there's echoes of trauma people are thinking about, and we do know that this these are important issues. So I wouldn't want to be glib in saying, hey, this is nothing, because the market is making a big move. But to me, if I said, okay, what are the reasons stocks have been attractive for the past 12 months? It's been about the innovation coming from AI, and it's the innovation as Wall Street looks onto the blockchain, and now it's the Fed that's beginning an easing cycle. These three things have structural tailwinds that aren't disrupted because of potential even rare earth dispute with China.
Do you want to see the market not end on its lows? We're not on our lows right now.
Well, it's Friday, and it's a long weekend. So as you know, a lot of people like to shut down their computers. So I wouldn't be surprised if we might see the market close on its lows. But to me, I don't think it's a signal. As you know, markets rarely bottom on Fridays anyway. So maybe Monday is the flush, but then, that's the buying opportunity.
All right, so that's it. So from Tom Lee's viewpoint, he says that he thinks that what is happening in the market from the 10th of October is a buy opportunity, or it's a buying opportunity. So buy the dip opportunity. Now listen to this. He says something that is very vital, of which I agree with him. He says that unless there is a rare structural change, that's to say that this hasn't cancelled. It hasn't cancelled the possibility that the US market will enter into recession. And this doesn't mean that US market is definitely going to enter into recession. I think that this is a mere panic sell. It is a panic sell because it didn't happen based on any structural change. It was a mere tweet by the president, what he intends to do against China. And I think what Donald Trump is seeking is a roundtable. He's seeking a negotiation that China comes down so that what US think it is not healthy from the side of China, they negotiate and they make a deal that will be good for both countries. And I think China and Xi Jinping, he is very smart. He doesn't want to collapse the Chinese economy. And Donald Trump is so smart. He thinks that the previous administration wasn't smart because the previous administration wasn't making America great again. So there's one thing that he doesn't want at all. To collapse the US economy is not in the dictionary of Donald Trump at all. So he's definitely going to make a deal with China. But he says he made a date that they plan to do that on 1st of November. So that means that between now and 1st of November, several things can happen. The market can continue to remain volatile. The price can keep going down. So Tom Lee said in the video that he thinks that Friday is not the day that the market bottoms. That means that some people were not even around when they saw the market going down or the market decline. Then the market is closed now. They will see the market open on Monday, and Monday, Tuesday, Wednesday, they might consider also selling, and the market will keep going down. That to say that the market can continue to go down, maybe from Monday the 13th of October until maybe 15th Wednesday, or maybe even throughout the whole of the week ahead of us. That is up to 17th of October. But here is what happened. If no other data is coming and there's nothing showing that a rare structural change, that should say that, the market has been going now based on AI and blockchain innovation. If we don't have any data from the Q3 showing that AI and blockchain are not as effective as we've hyped them or we've projected them to be, then if nothing comes out like that, then the market will continue to go up. But if something comes out, that's the earnings, the Q3 earnings from Intel, AMD, Oracle, Amazon, the big techs, and then that of Nvidia, Palantir, if they show that these companies are doing well and things are going on, then the market will continue. But if they underperform, then the market is going to come down. The moment now the market is running higher on the shoulders of AI and blockchain. If AI and blockchain fail, then the market has nothing else to rely on than to fall into a heavy recession. Until then, I think that any reaction we see between now and the rest of the week ahead of us, or the week ending 17th, 18th of October, is a buying opportunity. Now, there's something I want you to observe. Two things. In the stock market, there are some people who get the intel. There are some people who are around the present, and when they find out that China has made contact and China is ready to make a deal, that information, before it comes to social media, it will go straight to smart money. That's institutional investors first. And these people will buy it. It can be weekend and they'll buy everything. You wake up in the morning and you see a V-shaped recovery. You wake up in the morning and you see that the market has recovered. So what I would suggest is that if you have any dry powder, that if you have any money to invest, you can identify your incredible companies. And if you think the prices you are seeing from Monday, if these prices are good for you, you can start buying. But my advice is that be a hybrid investor. Don't invest everything all together. Everything I'm saying in this video is not a suggestion for you to buy, hold, or do anything. Remember to do you. What I am suggesting is that, or what I am saying is that, if you are really going to buy, then you should consider buying bit by bit rather than buying everything. Because if you try buying everything on Monday and on Tuesday, Wednesday, it declines further, or we get a new data showing that there is a structural change, that means the market is going to crash on you while you don't have any money to dollar cost average. So if you want to enter into the market with no more than 50% of your money. Sit on it keep about 50% of your money, waiting to see the reaction. If you see the market turning or bouncing back, then you can go in. So that is my advice to you. This is a suggestion that we are sharing from Ministry of Money Masterclass. Use the comment section to also share your opinion, share your understanding, share what you think on the market now. Please, if you haven't subscribed to the channel, remember to subscribe to this channel. Let's grow together and let's build wealth together so that we attain financial freedom within the shortest possible time. Thank you for listening up to this end, and I'll see you in the next one. Bye-bye.